Okay.
Happy Thursday, everybody. Mortgage Mark here, and today I have with me a very special guest that gets like very little to no credit from the outside world, except for internally with us, Michele Keeland. Michelle's been with me. We've been together we've known each other, worked together for, I want to say like 15 years at CTX, the prior company. Michele, welcome. What was your first, I just asked her and I stopped her before I even said, I said, how long you known each other? You know, ballpark at 15 years, give or take. And I asked her, what is her first memory? So I don't know what this answer is going to be either. So what was your first impression of me, MK?
You were green. You were a young whippersnapper.
I was young and dumb, guys, full of energy and ready to party. So some of those things don't change, but here we go. So happy Thursday. Michelle's job, just so you guys know, she's a former underwriter. She helps do a lot of the back end paperwork stuff that keeps us all out of trouble to make sure everybody's qualified. And she'll hit on that in a second. Rates this week, guys. Here's what Freddie Mac puts. You know, again, compliance makes me throw it out there. That's not our rates. That's just Freddie Mac, what they're throwing. That the 3.09 and 0.7 in fees, the points rather. Guys, check this out. The nice last little bump here, the last 2 weeks. Remember, green is good. So that means we're lower rates here. And even with the Fed meeting that came out, you know, that it got hit initially, but a nice little recovery today. Big reason why, guys, Fed met, you know, here's what's new. They basically said what we were thinking they were going to say. So the Fed right now, wrap your mind around this. They buy $40 billion of mortgages a month. And that's why rates have been so low. They've started doing this since COVID. They've been pumping it in there. What they announced is they're going to pull back $5 billion a month in purchases starting at the end of November. So supply and demand is going to kick in, guys. As soon as they stop buying as much, that's the demand, right? The same amount of mortgages still happen. So it's going to make rates increase a little bit because there's going to be less demand to make it happen. So just keep that in mind. Rates most likely can and will be going higher, barring some unforeseen event. If they do that $5 billion a month in tapering, it means that they're going to go and be done in June of 2022. Will rates be higher then? Probably, right? Who knows it on the crystal ball, but there you go. So back to Michele. Michele today is going to enlighten us on just some of the fun we've been dealing with for the last year and a half with COVID guidelines for the self-employed and all that, you know, complicated stuff. So MK, take it away. What are you going to enlighten us? Tell us what we need to know and do.
Really, I just wanted to touch on how things have changed for our self-employed borrowers since COVID, and our customers that may have purchased or refinanced in 2019 prior to mandates and shutdowns. It's a whole new experience and a lot more documentation is required. It used to be we would just get tax returns, 2 years tax returns, and maybe a P&L. Now we are required, in addition to the tax return requirement, to get a profit and loss, and in addition to the profit and loss, business bank statements or personal bank statements if we have a small business to support and validate your profit and loss. And if those numbers aren't lining up, it can mean a holdup in underwriting. So my recommendation, and I went ahead and put a flow chart here. This just shows you this is Fannie Freddie Mac. This is the flow. It's much more involved. So my recommendation is to get that documentation. If you've got a self-employed borrower, to get the documentation soon. And it's also time sensitive. So keep in mind, if you have someone that's pre-approved, that documentation is time sensitive and may need to be updated more than once.
Check it out, guys. Look at what she has, right? Is the P&L statement, is it audited, unaudited? 99% of the time it's unaudited because the CPA hasn't checked it. Obtain this stuff, banking of deposits, go to step 2. I mean, it's like the game of life or Candyland where it's like you get to go and you take the secret slide to go to the next level. It's crazy. So point is, what Michele just said, now versus later, get your docs in, guys. Like, get them in while you can. So here's our tip of the day. I just found this out, so I'm sharing it with you guys. If you lose your AirPods, apparently there's a setting on your like Apple phone that'll alert you as you walk away from your AirPods. And you're like, hey, you left your AirPods. I was like, what? Mind blown. Then lastly, I just thought this was fun because, you know, it's Zillow. Zillow supposedly getting out of the buying and selling refinance, or not refinance, but buying and selling homes. They were losing too much money. I got some pleasure out of that. I'm not going to lie. So good for Zillow getting out of the business of buying and selling homes and competing with us to some degree. So Michele, thank you for joining. You guys, thank you for watching. Everybody let us know if you have any questions, need anything from us over the weekend. Have a fantastic week. We're out.